Mr. Zhang, welcome to CGTN.
Thank you for having me again.
It's a great pleasure to have you. Now, China is talking about the 3 risks over the next 3 years that needs to be worked on. One of them is reduce the risk in the financial sector. You are, of course, working in the financial sector, PE particularly. So what does it mean to you?
I think it's been talked for a while.
Quite some time.
The financial risk has built up in the system, specifically the debt to GDP ratio. I think at this point is over 250%. I think the general view in the international investment community has been it's very high risk. That's why during World Economic Forum in the past several years, every year, the main theme seems to be when is China going to collapse. I have always taken the view that it is a risk that we should watch out for, but fundamentally China is well equipped to deal with that risk, largely because the savings supporting that leverage is mainly domestic.
Right.
Second, the form of that leverage is mostly in the form of bank loans rather than capital markets, so it's much easier to control, especially given the Chinese government controls most of the banks.
Right.
So the main focus is to try to reduce it gradually without actually triggering a systematic collapse or burst of a bubble.
But what about for your industry?
For my industry, in the private equity industry in China, we don't deploy that much, we do not employ that much leverage, unlike our counterparts in the U.S. Because fundamentally, when we decide to do a investment, the return mainly comes from growth, comes from restructuring, improving efficiency, rather than from pure financial engineering, which is just by piling up the leverage. However, the issue is that there are a number of shadow banking products that pretend to be PE product, but in essence, it's really debt product. Those may have issues. But overall, by and large, PE, at the end of the day, is equity-based investment. So increase in private equity investment is actually good for the overall economy, given that there are 2 ways to reduce leverage. One is try to reduce debt.
Right.
The other way is actually trying to increase equity. Then proportionally, the leverage will not be as large.
You once said, Mr. Zhang, that your company aspires to become China's Blackstone. I just wonder, how is that process going on so far? People have been talking about China model, China practice. What is your thought about that?
The private equity industry started to develop in the U.S. Well over 30 years ago, and Blackstone is a pioneer of that and has been leading the industry. So it's a great model for us to aspire to. The U.S. economy is a lot more conducive to private equity type of investment because change in ownership is fairly mundane. In China, it's not nearly as easy, and China is also characterized by fast growth, so which means venture capital and growth capital are the dominant form of investment. But by nature, they are a lot smaller versus leverage buyouts. So I think as the economy in China matures, the private equity investment will mature as well. So I think that bodes well for us in terms of growing our size.
That sounds terrific. But at the end of the day, you are a state-owned enterprise.
We are mixed ownership.
Mixed ownership.
We have CITIC as our sponsor, but we also have Tencent, plus the management. We also have foreign investors, like Qatar Investment. We also have investor from Taiwan, Fubon Financial Holdings.
Have Tencent and companies like Alibaba been transforming the whole industry, like your industry, in a way?
In terms of investment in the growth in new economy, certainly. You can see that they are dominant these days increasingly in venture investment as well.
Right.
A lot of they back all the sometimes opposing camps in, for example, transportation, in O2O, and so on and so forth.
That's right.
That's on one side. But on the other hand, they have been integrating themselves more and more into the real economy.
So you don't see a crisis for you?
No, definitely
not. At all.
I think at this point it's more complementary because they represent more strategic investment angle. We tend to focus more on the financial aspects.
Well, that is not only about China's financial risks, it's also about how Chinese companies are going global and inviting big names to come into China while being the manager of that company here in China. McDonald's, the global fast food chain, forged a new partnership in China last year. On January the 9th, the CITIC Group officially announced that CITIC Capital and the Carlyle Group had reached a strategic agreement to form a joint venture. The new company is the main franchise holder of McDonald's business in China's mainland and Hong Kong. The chairman of the new McDonald's China unit, Zhang Yichen, tells us how well the chain's golden arches translated into Chinese. Actually, it is quite a story. Mr. Zhang, you and your company transformed in a way the operations of McDonald's in China, and there has been a lot of stories related to it, starting from its name.
Well, since we have taken over the business that's holding all the McDonald's restaurants in China, so essentially we're the master franchisee for McDonald's. So the company that we own cannot be called McDonald's anymore, since McDonald's is not the majority shareholder.
Okay.
So we had to pick a name. They said, well, we will let you to use the Chinese translation of Golden Arches. The Golden Arches in the U.S. is actually synonymous with McDonald's. Anytime you say Golden Arches, people naturally understand that's a McDonald's.
But in Chinese it's not.
In Chinese it's not. My feedback initially, I said, are you kidding me? Golden Arches in Chinese sounds like a jewelry store. But in the end, I said, okay, fine.
Okay.
You know, we just use Golden Arches. So I used the Chinese translation, 金拱门. And we didn't try to. I know.
It was
actually the social marketing event of the year in China. So much user-generated content on that. All kinds of jokes, all kinds of people making fun of it.
Everywhere.
I got free marketing. You know, the amazing thing is the number is astounding.
Really?
It's total of 9 billion clicks.
You seem to have a big smile on your face when you're talking about that.
Oh, absolutely, absolutely. That made me famous. So a lot of times I introduce myself as chairman of CITIC Capital. It doesn't really ring the bell. If I tell them I'm chairman of Jinggomen, that's what they immediately their eyes all light up. So that started with the name change. Then, you know, last year McDonald's had done really well in China, and it was largely driven by 3 things. The first is we clearly identified delivery as a major trend, and for major cities like Beijing, Shanghai, Shenzhen, the delivery already account for almost 25% of the total income. And that is a huge growth driver because the cost associated with that growth is very low.
And I guess McDonald's worldwide, they have never had this like before.
They try to launch this delivery. For example, this past year they launched in the U.S. as well.
Yeah.
But I think this is largely dependent on the country, in the sense that the consumption habit is one thing.
Yes.
Second, the population density is clearly another issue. And third, the cost of delivery.
Right.
Yeah. In China, you have all those 3 things going in our favor. In the U.S., you don't.
Is there something that you think these messages they can get and also spread around in their practices worldwide?
Oh, absolutely. They very much, their CEO, Steve Easterbrook, told me so.
Excited.
Yeah, he was very excited in November when I was telling him the results. And he said, you guys are pioneers in this, and your experience could be very useful for McDonald globally.
Mr. McDonald is learning from Mr. Golden Artist. So
well, in some ways,
yes,
that's the first driver. And second is digital marketing. In China now, almost 60% of the payment in McDonald, is electronic. Basically, mainly WeChat Pay and Alipay.
Yeah, mobile
payment. So you actually know exactly who is buying your product, what they're buying, when they're buying, how frequently they buy it. So once you have that data, in terms of further marketing, it's very, very powerful. That's why we have this customer loyalty program. So you collect this data, you push, if someone likes crispy chicken and hasn't come in for 3 weeks, you push them a coupon. Right? So all these marketing methods are extremely effective, and it's mind-boggling. I mean, it opens the eyes for a lot of people.
When you think about that, only one example you have just raised, but dramatic changes already happening, great transformation as well, as to how a company coming from outside and how its businesses is likely to be transformed inside the Chinese market, and how this market is likely to give the feedback and experiences and get it spread to elsewhere for this company. Fundamentally,
China is such a large market. A lot of multinationals, when they first come into China over the last 20-some years, they have great product, they have great management, they have great technology, and they are head and shoulders above the local competition. But in the last 20 years, a lot of local competitors catch up.
Right.
A lot of these multinationals actually haven't really changed their practices. A lot of times they are not changing for good reasons, because they are a global company, and at the end of the day, they want to keep a uniform standard. But my point is always that for a small market, you may not want to change, because the trade-off is not necessarily favorable. But for a market like China, you almost always have to change. And a lot of multinationals develop their practices based on the U.S. market, given that was the largest market.
Right.
So I think that's why I applaud the McDonald management for making the decision to team up with us to develop the China business.
China business experience certainly can be spreading to the other parts of the world, even though there are things that could be popping up from time to time. For example, the White House recent announcement of the new tariffs on steel and aluminum is raising fears of a possible trade war. The Chinese Foreign Ministry said China hoped to fix bilateral trade issues with the U.S. in a constructive manner. How tough is it for Chinese companies to do business in the U.S., and how difficult is it for Chinese companies to try to cooperate with the U.S. partners? Zhang Yichen has some answer. Some of your business projects related to acquisitions worldwide, including in the U.S. market, but that, Mr. Zhang, could be very sensitive, some say, given the current geopolitical environment.
I do agree. It is somewhat a concern, but we have been very careful. We have invested in the U.S. in a number of companies in the past, and we have always made sure we comply with all the relevant rules and regulations.
What kind of company? Pharmaceutical company, consumer products?
Consumer product companies or service companies, some manufacturing companies. We have a great track record in helping these companies develop their market in China. So I think it is a win-win type of a situation. Similar with GNC. GNC is in financial distress. The main potential for us in terms of growth for GNC is to form that joint venture in China, try to build their business here.
You see the changes going on in the White House regarding trade, the official movement in a way. And also you see the sentiment on the Capitol Hill regarding China-U.S. relations, particularly about trade. Midterm election coming. What is your understanding of the latest situation, for you, how to avoid the ultimate risk?
Well, we have to be mindful of
that. Did I see a long sigh from you?
Yeah, because it's a tough question. So I think fundamentally trade and investment is good for everyone. We are putting money to work in the U.S. and the work we do, the investment we make, will create jobs in the U.S. Now, given GNC is a consumer product company and there shouldn't be that much political sensitivity involved.
This is the annual season when people from all walks of life come together and talk about the future of the country. What kind of country do we aspire to be? Where do we want to go? That goal, that future, to you, what exactly is it?
I think that's well spelled out by the Chinese leadership already, that we are trying to build a country that's open, democratic, as well as harmonious, in which people can live a prosperous life. Almost all the Chinese over the last 40 years, they have seen their life improving almost daily. I think the leadership made a pledge to take it to the next level. So at this point, our GDP per capita is roughly about $8,800 US, and there's certainly still room for us to grow. As we discussed before, the Chinese people want a better life. That's where the whole country is going. Of course, given China is such a large country, that we will be playing an increasingly leading role in the international affairs. We are getting closer to the center stage of the world. With that comes responsibility, and I think President Xi Jinping, during his speech in Davos last year, made it very clear that China is ready to take on that responsibility. At the same time, China does not seek to endanger anybody else's interest. China would like to keep the current international order. At the same time, China is a champion of globalization, international trade. So from all that perspective, I genuinely believe that a more prosperous China is better for the world.